What's going on, traders? Andrew O'Connell here with Pristine Capital, coming at you with yet another market recap video. It is April 8th, 2022. Please go ahead, do me a huge favor and click the like button on this video. Also subscribe to my channel. That way you don't miss any of my future recap videos. All right, let's take a look at the headline indices. We're going to talk through the markets today, and we're also going to look through my trades for today. Before we do that, quick first disclaimer: nothing in the video should be construed as investment advice or recommendations. Always follow your own trading plan, your own risk parameters. Last but certainly not least, do not YOLO your entire account to any one of my trades or anyone's trades for that matter, not even your own trades. All right, let's dive into today's action. I must say there were some pretty interesting divergences here. We had the S&P 500 finish down 0.27%. We had the NASDAQ QQQ finish down 1.4%. And we're continuing to see that the Treasury market is incredibly weak. We're going to take a look at that shortly. IWM small caps finished the day down 0.8%. Dow Jones finished actually higher, up 0.4%. Dow Jones just marching to the beat of its own drum here. And we had the ARK Innovation ETF down 3.21%. Now here was the big divergence that I noticed. Also, ranges, pretty much everything closed the bottom end of the range except for the Dow Jones. But here was the divergence. The volatility contracted across all of these indices. And a lot of times that is a bullish divergence when the volatility starts coming out. So that is definitely something to keep an eye out for. In terms of breadth, we had a mixed bag. So this I thought was kind of crazy. We had the S&P 500. It was down for most of the day. And we had positive breadth. So most of the stocks in the S&P 500 were actually trading higher, but it's just some of these big mega cap tech stocks that make up a big part of the index were actually trading a bit lower. So yeah, very, very odd. And then you can see for the small caps, we only had 32% advancers. Always keep in mind there are more stocks in the small caps than there are in any of these other indices. My trend model flipped from a -1 to a +1. And this is the best thing about trend trading and actually having a process. Your process should be guiding you on where you want to be transacting, when you want to be transacting, etc. So yeah, my trend model had flipped negative maybe like in the last 2 weeks or so. And I've been making sure to not really do any swing trading, not taking a lot home with me at the close. And today we actually flipped. So everything in me is like the market's going to crash. Do not go long anything. Make sure you're like shorting the living daylights out of this market. But I want to make sure that I am moving in accordance with my trading plan. Finviz Heat Map. Take a look here. We had all the mega cap tech stocks as well as the semiconductors. Semiconductors are just so weak, but these were all red. We had Tesla down 3%, Amazon, Google, Microsoft, Apple, all of those. But across everything else, the breadth was okay. And you can see energy really led the market, and we had financials that were also leading the market here. Sectors, we had the healthcare sector up another 0.6%. A lot of these defensive areas of the markets, as well as energy. It really seems like there's two baskets of stocks right now, and it's like utilities, real estate, energy, gold miners, and then the other baskets like the ARK Innovation ETF and like solar stocks, semiconductors, those kinds of names, Bitcoin and cryptocurrency names. And they're kind of just alternating. And this can be one of the most dangerous market environments ever, where nothing's really gaining much traction. It's just like every day one group's down, the other group's up, one group's down, the other group's up. And yeah, that can be a really tough environment, because by the time you're allocating to one group, maybe the next group is moving, etc. So yeah, a lot of red across the board, but there were those bright spots. Style factors, we had this high div, low vol style factor performing the best. And that makes sense. A lot of the energy names, they pay out big dividends. And this group was up 0.86%. Worst performers were growth and high beta. Now, to put this into context, let's take a look at treasuries. Because these treasury yields, they just continue to spike higher. This is getting pretty wild. Like, I'm going to pull up Coifin as well, but these are our 10-year treasury futures. You can see another down day. They finished down 0.31%. It's incredibly difficult for the equity market as well as just risk assets as a whole to advance. When you have treasury yields moving higher, it's very tough, because the 10-year treasury yield that's used as the discount rate for a lot of different financial assets. Yeah, let's look at the 10-year yield here. The 10-year yield finished out at 2.706. And remember, back in 2018, 2019, this is when we hit the peak in the 10-year treasury yield. It was at, around like 3.2%, somewhere around there. And when that happened, the entire financial system really just buckled. Then the Fed had to reverse course and start loosening up monetary policy. Now it really just looks like we're on a runaway freight train for this 10-year treasury yield. Look at this. This is the 1-month chart. So yeah, when the 10-year treasury yield's doing this, it's very difficult for tech stocks to be booming and mega caps and those kinds of names that are really very sensitive to what's going on in the treasury market. Now let's take a look. Let's actually go to our VIX, because I remember mentioning, hey, the volatility is coming down a little bit. Look at this. The market has been weak, but over the past couple days, we've been putting in long upper wicks on the VIX, as well as now we're starting to see NASDAQ vol actually come out of the market a little bit. All right, let's check out our indices. S&P 500. We had our third test of the 20-day simple moving average today, team. And so the first test, maybe there's buyers there. Okay, then you test it another time. Maybe there's some leftover buyers. They go ahead, they buy the dip. Then a third time, more buyers come in. But the more you continue to test the same level while you're not really making any incremental progress, the weaker and weaker that level's gonna get. So this is test number 3. If we do this like a 4th and 5th time, eventually this is gonna break and we're going to cascade. We're gonna have to see what happens on Monday. So yeah, we ended up finishing up above the 20-day simple moving average, but below this 5-day EMA right here. And let's check out our hourly chart. Check this out. So we ended up finishing the week below the weekly value area. So everyone that bought last week is pretty much still underwater. And you can see we have a new weekly value area that's going to be lit up next week. And we're going to be trading inside of it. We're pretty much right at the weekly point of control for next week. Let's take a look at our NASDAQ. The NASDAQ was really the problem child today. So you can see the NASDAQ, we're below this monthly value area high. We're below the 20-day moving average, and we are pretty much right on top of that 50-day moving average. Now, this is very highly correlated with these treasury futures and really just the bond market as a whole. The bond market is incredibly oversold. And what's interesting is that the bond market's moving higher because inflation is a little bit out of control, and the bond market's adjusting to that. But some of these market-based measures of inflation, they're actually coming off the highs, like crude oil. This was the big problem. Oh my gosh, energy prices going up, inflation's going to spike, but we've already hit our peak in crude oil prices. Same thing we're seeing with like freight indexes, used cars. They're all starting to peak. So it's very interesting is like we're hitting the peak of a lot of these inflation gauges, but treasuries, which they're going to be very sensitive to inflation, they're just continuing to spiral out of control. And I'm thinking this might be some sort of like highly convex move where there's just like 4 sellers that are selling all of their treasuries right now. And yeah, we're going to have to see how it plays out next week. But I think it was kind of telling that the volatility actually decreased in the NASDAQ today, despite a very weak performance for the NASDAQ. So I ended up getting long some NASDAQ towards the close. Yeah, so I did try a day trade in Apple today as we tagged that 20-day moving average, and as my trend model flipped positive. And I took some May 20th 170 calls, took these for $7.05. I closed some of these out for a profit. Then I closed the other part out for a small loss. Ended up being a complete scratch. So I was like, hey, I'll take it. Take the scratch, whatever. Keep it moving. But then I did take some NASDAQ calls at around 2:30 p.m. today. I got long the May 20th 350 strike calls for $12.71. I sit here playing for a rip into the close. We did not get a rip into the close. But given that my trend model is positive, I wanted to make sure that I brought a little bit more exposure home with me. The way that I function at this point is like, if my process flips to telling me to be a little bit more bullish, and I don't do that, and then the market goes higher, that's a miss. If I do adjust properly, I add a little bit more exposure, and the market goes up, that's great, I followed my process. If I do that and then the market continues down, my trend model is eventually going to flip if that's the case. And then, that'll be the case to reduce that exposure again. So yeah, even though everything in me is like, why would I be adding a little bit more exposure here? This all looks, pretty crazy. I want to make sure that I'm trusting the process that I've built. Oh my gosh, I just realized next week, I believe. Yeah, next week we already have monthly OPEX. So yeah, we'll have to see what happens. I'm going to be putting out our weekend market analysis video as always for all Pristine Capital members. That's going to come out this Sunday. We're going to do a deep dive into the price action of the indices, how the market is trending. We'll look at economic indicators, all that good stuff. And then I'll be putting out my weekend watch list video as well. With that being said, that about does it for today's market recap video. I hope you all had a great trading week. Hope you've been able to navigate these pretty wild and uncertain markets. And I'll see you all on Monday.